So hi, I'm Dave Dinkel. We're here tonight with insurance mythbusters for both real estate investors and realtors. The question always comes up, why do I need insurance? Why do I have to pay for things that I don't ever need? And tonight we're going to talk with a pro about that exact issue, about why you need it and the importance of it when you do need it. First of all, we have a little disclaimer. Information is for educational purposes only, not to be construed as legal or accounting advice. When you get a chance, read this other disclaimer. Very important, but most important is we're talking to Bob Peppe. I'm Dave Dinkel. As I said, I'm the interviewer. I can be reached at davedinkel.com and besttransactionalfunding.com. There's my phone number. Bob Peppe is also known as Bonefish Bob, and you'll see why a little bit later. Bob's been around the South Florida for many years. I don't know how long I've known him even, but he's done an extraordinary job on getting insurance for me when I've needed it. And you don't always think you're going to need it, but when you do, it's something you have to have and you can't get if it's too late. So this is why they call him Bonefish. The thing about Bob is he's a fly fisherman. You can see a fly reel in his hand. This is Bob again. He runs Lone Palm Insurance. Bob was with another insurance agency for a number of years, and he's out on his own now, which has worked out much more in his favor and ours also. There's his contact phone number. So if you think you need insurance or you find out at the last minute that you need insurance because you're getting a hard money loan, call Bob and ask him. He'll be straight up front with you. So what we're going to do is I'm going to ask Bob what I think are the most frequently asked questions about insurance and kind of grill him on the answers for what to expect. First of all, what's meant by a storm in the box?
Dave, hello. How are you tonight?
Good, Bob.
That's good. The storm in the box is a term that you hear all the time, but honestly, no insurance companies use it anymore. The traditional storm in the box was a latitude and longitude that surrounded basically Florida. And anytime a storm, a tropical storm or hurricane came into that area, you couldn't find insurance. Now it's much simpler. Citizens sets the tone. If there is a tropical storm watch or better anywhere in the state of Florida, Citizens shuts down. Once that occurs, pretty much everybody else follows suit within 12 hours.
So what that means when you say shut down is you can still go and do a closing, but the problem is you can't get insurance issued on the house. So if the storm does come through or you get a tornado or something happens to your property, you're just simply out. Is that correct?
That's 100% true. Obviously, if you're getting a hard money loan, you're not going to be able to close because they're going to require the insurance. If you're paying cash, well, it's your own risk and you can do it then. Most of the time, people give me a day warning. And if you give me a day warning and we know there's something around, I'm going to grill you and tell you, hey, something's happening. You're closing in 2 days. Let's just bind it today. If it doesn't close, we cancel it. Doesn't cost any money.
Okay.
That's why you deal with somebody that knows your business, because you don't want to not close and lose out on a $20,000 deal because of something silly like what we were dealing with this weekend.
So for new investors, why do they need insurance and when do they need it?
All right, a new investor that's buying their very first house. If you're going in there and you're paying it with your own cash, your own money, and you're not getting a loan, then the first thing is you don't have to have insurance. However, if everyone else requires that you should have insurance just in case, why are you so much smarter than everyone else and decide you shouldn't have it? Realistically, what we're talking about is you buy a house and it's vacant. You're going to rehab it and then you're going to sell it. You're going to make $25,000. A line item in everybody's closing for electrical, for plumbing, for AC, for a kitchen, for appliances. There should be one for insurance. It doesn't cost that much money and it should be done because of the fact that you don't ever know. The hurricane could come. The place could burn down. I've had customers that bought a house on a Friday and on Sunday they had a fire. Total loss. They bought the insurance. They collected the money.
So we've mentioned the word insurance now a number of times, but let's talk about what are the various types of insurance.
All right. Well, first of all, you have your builder's risk insurance, which is what your average person would buy that's going to rehab a house. You're going to buy a house that's vacant or going to be vacant in a few days. Then they're going to rehab it, and then they're either going to sell it or they're going to make it a rental. During the time that you're doing the work, you buy a builder's risk insurance. That type of insurance can cover fire and vandalism, can cover windstorm. It's also going to cover liability in case somebody slips and falls. So it's a basic policy, but it's the requirements that almost every lender is going to have. The lenders sometimes have different levels of coverage they require, but they'll all require some level of coverage.
You mentioned renter's insurance. What is rental insurance?
Well, obviously, when you first buy it, you fix it, you have a policy that contemplates the house being empty. Once there's somebody in the house permanently, a tenant, then the insurance you purchase is rental insurance, more commonly known as a DP1 or a DP3. But it's a policy that contemplates someone living there, and you can cover certain things: fire, theft, vandalism, windstorm, and there are different levels of protection that you can buy, and we would custom tailor that depending on what you wanted to pay and what you want to actually cover.
So what is liability, though? What if somebody's hurt on the property when it's vacant, for example?
Well, when it's vacant, liability is always the same. It is what you, as the owner of the property, might become legally liable to pay or be responsible for because of something that your property or you did that caused the person to become harmed at your property. Mailman walking by slips on a hose because you were trying to keep the swale alive and you had the hose running across there. He trips on it. That's a liability claim. Now, when you buy a builder's risk, liability is almost always included. When you buy a rental, it is almost always excluded, which means that you buy separately liability insurance to cover that rental or a group of rentals, depending on your portfolio and your situation. The liability can be as little as $300,000, but in my opinion, should never be less than $1 million.
The cost isn't that much difference.
Nominal. I mean, on an annual basis, I'd say if you were buying it for one unit, the difference between $300,000 and $1 million, $50 a year.
Oh, wow. Well, let me ask you about flood insurance, though, because this is an issue where some of the insurance companies come back after a storm. They say it's not our issue because the flood did the damage.
Okay, well, all insurance policies, builder's risk, rentals, your homeowners, your business policy, every policy excludes flood, which is rising water. A pipe bursts, and even though the pipe water is going up, it's not technically rising water. A hurricane happens, the water is almost always falling. But like in Katrina, the levee gave way, and then Lake Pontchartrain filled every place. That's rising water. And we don't have as much rising water here in South Florida as you might think because of the nature of our soil. But there are neighborhoods like Sweetwater where they get flooded all the time. Down where I live in the Keys, obviously the water just comes over the entire island. When the water rises, it's flood insurance. It has to be a separate policy. Some of the hard money lenders don't require you to have it, even if you're in a flood zone. Some do. It would be a risk that you have to contemplate. If you get a standard mortgage, if you're in a flood zone, you got to have it, period.
Yeah. Where does windstorm come into these?
Well, windstorm actually is part of a builder's risk. It's part of a rental policy. It has nothing to do with liability or flood, but a windstorm is anything where there is damage to your home, the roof, windows, and it's all driven because of a hurricane, or not even a hurricane, just because of a wind occurrence, a tornado. And windstorm is a coverage which almost all the hard money lenders require because of where we live. The challenge in windstorm is you usually have a large deductible. It's a percentage of the total value of the building. So if you own a building and it's insured for $100,000 and you have a 5% deductible, that's a $5,000 deductible. So it's a substantial deductible, but if that roof blows off,
yeah, it's not so substantial anymore. Yeah.
You're going to be happy you have it.
Yeah. Well, let's talk about why would an investor that wholesales a property need insurance? And if so, what type?
All right. Many of Dave's students wholesale properties, A, B, B, C. And when it's a traditional happening all at once, a wholesaler would never buy insurance. He could potentially want to buy insurance for professional liability, but he would never buy insurance on the property. However, even wholesalers need to have a good relationship with an insurance agent because Dave can attest to the number of times where you're going to do an A, B, B, C, and then all of a sudden BC has a little problem and he can't close till tomorrow. Or the next next day. And then your buyer has to go and get one of those 48, 72-hour loans. And then they require insurance, even if it's for a short period of time.
Sure.
Having a relationship with somebody that can pull the trigger on something like that at the moment is important. Even though normally a wholesaler doesn't need it, they still, if they do enough wholesaling, they're going to need it. And I'm sure, Dave, you've seen that.
Yeah, I call it extended transactional funding, and it's dangerous to say the least.
But it happens.
It happens. What's the difference between buying a property in a land trust, company name, or the investor's name?
From my point of view, as a real estate investor, because I've bought and sold a lot of houses over my career, there is absolutely no difference how you decide to hold title. There's absolutely no difference to me. The insurance policy has to be written properly for a land trust or an LLC or an S Corp or even in your individual name. So the main challenge would be that you deal with an insurance agent that understands the entities and what your end goal is. Then it's meaningless. Obviously, from a asset management point of view, that's a different question for an attorney, but I'm sure that Dave talks about that and he has people on that are specialists in that. I have an opinion about that too, but that's an opinion that I would share with people one-on-one.
I just recently did another Mythbusters on land trust. So if you guys are watching this, you'll see another one come up about that, the local attorney. If I'm doing a rehab but paying cash as opposed to using a lender, do I still need insurance?
Well, I kind of answered that question. At least I started to answer that question a moment ago.
You
If
did.
every hard money lender says you have to have insurance because they want to protect their asset, their $100,000 or $200,000, and if you're taking $200,000 out of your 401 or your IRA or your bank account, if you're that fortunate, do you really want to save $1,200 and put that money at risk? Because at the end of the day, chances are nothing's going to happen, but nobody has a crystal ball and knows when something might happen. And if it does, and you're on the short end of that, it changes your entire rehabbing and, your entire business of real estate, because that's a big hit.
That's a big hit
for anybody.
Yeah, especially with something like fire where virtually you can burn to the ground.
Correct.
If I have a claim and it's being paid and I'm getting a check from the insurer, what name does the check come in? Mine or my lender's?
Well, that's a great question because they don't have a lot of claims they don't know. But as long as you have a mortgage, the mortgage company requires that they be listed on the policy as a mortgagee. And as a mortgagee, they have the check that comes to, say, myself as the owner of the property or my company, Lone Palm Insurance, and Dave Dinkel Transactional Funding. Whoever the lender is going to get the check as well as you. You will then have to go to the lender and have them sign off on the check. And obviously that procedure is different depending on the lender. But what usually happens is they usually require you to do a certain amount of work and then they give you a stipend. And then when the work is done, they give you the rest of the money. But that is something that is entirely different and could be different with absolutely every company. But you're never going to get a check and be able to run to the bank and say, I'm just walking away, because they're not going to allow that.
Yeah.
Now, if you deal with private investor, your uncle, and I always ask, well, they say it's a private investor. Well, don't you want to list them? I said, we don't have to list them. Okay. If nobody wants a certificate, it's not my responsibility. However, if the house burned to the ground, the buyer would get the check and the uncle who gave him the money could be left in a very tough situation. I would hope no one would do anything to their uncle like that, but stranger things have happened.
I think one of the places where I see it occasionally, a vacant property, it's being renovated and vagrants move in. Maybe the weather's cold, they start a little fire to keep warm. Pretty soon they burn the house down. And, the investor's got 100% liability in that. So we're going to talk about what the insurance covers, by the way, in a second. When I've completely renovated a property and I turn it into a rental, do I still need insurance?
Well, that's going to be the same as the previous question. If you paid cash, then it's your decision. Most people that renovate a property, they're usually going to hold it as a rental, and they're usually going to go ahead and get traditional financing. They're going to get a hard money loan, which is usually for 12 months with a balloon. So they're going to pay that off and they're going to get traditional financing. Then you're going to get whatever Bank of America requires, which is going to be liability insurance. It's going to be dwelling insurance with windstorm. And if you're in a flood zone, it'll be flood insurance also. But beyond that, really, this particular situation is where I really get on my soapbox. If you own a property for cash and you decide you you don't want to have insurance because it's too expensive, the deductible's too high. I understand that. I have people that own many properties that they don't insure. However, if you own a rental and you don't buy liability insurance, you are insane. There is no reason to take that risk. Drive down I-95 and look at every third billboard. It's somebody that wants to sue you. And I'm sure you know, landlords are getting sued left and right. I'm sure you hear this, Dave. And without liability insurance, you might as well just hand them the keys. It's so cheap.
I had a property in Weston where the guy that owned it was a miser and he wouldn't buy any insurance. Along came a storm and blew part of the roof off. But ironically, not all the homes out there, there's a subdivision, about 500 homes that are what we call stick houses, mean they're wood frame. And water got in between the inner wall and outer wall. Ultimately, it became rat infested. And we bought it for $120 and sold it for $289,000 because of that issue with it. Had he had insurance, they would have mitigated it with a tarp and then fixed it, and it would have been a lot different, but that's what happened. What type of property inspections would I need, if any, and when would I need them?
All right. Well, we know that we have a member at our club that talks about inspections. When you're buying a house, a lot of times people want to get inspections. They're usually full home inspections in order to be able to negotiate a better price on the house. That has nothing to do with insurance. And people that do that, sometimes they get a discount, and that's fine. When you buy a builder's risk, the reason you're buying a builder's risk is because the property will not pass a traditional inspection. So when you're buying a house that you're going to rehab, don't ever get any inspections other than pre-inspections that are going to negotiate a better price, because it's a waste of your money. However, once the house is completed, if you're going to hold it as a rental, then depending on the age, you're going to get a 4-point inspection, which the 4 points are the roof, the electrical, the HVAC, and the plumbing. That's the 4 major items they'll look at, and that's for eligibility. You would also get a wind mitigation, and that inspection you do to try to get credits to lower the overall cost of the insurance. But that's the inspections you get when it's a rental. If you're selling it, that's the inspections your buyer's going to get when he comes to you and says, oh, you got to fix this, you got to fix that. That's because of the 4-point inspection showed a couple of things that Joe the handyman missed.
Yeah, exactly. What about liability insurance, and how much is enough? You mentioned it briefly before.
Well, the liability insurance that we buy every day for builder's risk is $500,000 per occurrence and $1 million aggregate. When I write liability insurance for rentals, I really only ever quote a $1 million occurrence with a $2 million aggregate. That means there's a maximum of $1 million that the policy will pay to any one person, but the insurance policy will pay a total maximum of $2 million to any number of persons in any numbers, as long as the total amount doesn't exceed $2 million. Now, I'm sure that Dave has had or will have somebody talking about asset protection, and I have been told by lawyer friends of mine who do asset protection that they believe that $3 million is now what they consider the old $1 million or the new $1 million, because the $1 million, with the greed that's out there, you can never tell. But the one thing I want to say about that, just real briefly, is that it's funny how every claim that occurs almost always goes right to the maximum amount of insurance that you have.
And if you don't have insurance, then it goes to your maximum amount of your net worth, I guess, right?
Well, right.
Yeah.
It depends on how hungry the attorney is. But yes, you're right.
Why is the actual insurance amount less than what I paid for the property?
Well, it can be less and it can also be more, because remember, when you buy insurance, you're buying insurance on 1,000 square foot building. I don't care about it being on the ocean or on the intercoastal or on Broward Boulevard or in Weston. It makes no difference to me. All things being equal, if I build a 1,000 square foot building and it's concrete block and it's this and that, it should cost me exactly the same to build everywhere. $140 a foot, thereabouts. But if I bought that house and it's on the intercoastal, I have to pay for the land. And the land makes that house worth $700,000. That same house, if it's on the ocean, is worth $1.5 million. And you might get a loan from Dave for $1 million on that house. And Dave says, I want to cover $1 million. I'm saying, Dave, I said, the value's in the land. I can't do it. I can massage the number up, but at the end of the day, I'm covering 1,000 feet of building. And I only care about what it costs to build it.
I am financing a property on the overseas highway, a single family home on the
Mhm.
ocean side for a transactional funding thing. And it's a
Well,
1,000 square foot and the cost basis is going to be 550.
right. Well, down
And
here it is more expensive because of the pillars and the things like that. But still, you could still build that house for $220 a foot.
my friend has a bunch of properties. He has them all in one or on one policy. How does that work?
Well, it's called a master policy, and I have many customers that do that type of insurance. I personally don't have my portfolio insured that way because I've found that generally it's a little more expensive. I know you would think the opposite, but that's not true. The convenience is that when you have a property and you sell it in 1 month, you take it off. So there are conveniences in putting 20 properties together, but is it really worth it? And what I do with most of the people that I talk to is we look at what their goals are, what they want to do. And we might put some of them on a master policy, but then we might do some another way because master policies don't give you credits. If you're renting something and you have shutters and you have a hip roof, you're going to get tremendous credits. So something that might cost $2,000 without those credits now costs $1,200. If you put it on a master policy, it's going to be $2,200. Care about credits.
What is your recommendation for the best policy for me?
Well, most people ask me, what would you buy if this was your house? That's a better question because until you and I know each other, I don't know what your risk tolerance really is. And at the end of the day, nobody can tell you what that is because the amount of risk that I'm willing to take is not the same as Dave or anyone else. Everybody has a different tolerance to risk. And that question is a question that I talk to people every single day about, but it's got to be to your requirements. And that's going to be specific. It's got to be personalized because if someone just says this is what you should have without knowing anything, at the end of the day, it may be right, but it may be wrong. You don't know.
Well, that's what you do. You're a pro in putting these together and making sure they work for the investors. Now, let me ask you this question. Besides your wife, what's been your best catch? For you guys that don't know what that is, it's a black drum. That's a roosterfish. What is this, a Chinook salmon?
No, actually, that is the silver salmon.
Going upriver, and before it dies, it changes
It
color
changes.
and
Its
hooks.
nose gets all curled. It's great.
This is a really huge red drum. Well, how big was that?
That was about 35 pounds.
Spectacular on a fly rod.
And all of these are on a fly rod. Every one of these fish you're looking.
Here's barracuda.
Actually, I got him on one of those long flies.
I call these ocean tally. They're like trigger fish, but this is a giant one. You caught this in.
This was Christmas Island.
So what is your best catch here?
Probably the fish that I'm most proud of, probably the redfish.
That's a beautiful fish.
It's a beautiful fish, and the way you catch that fish, because they have inferior mouths. Their mouths are down, so they feed on the bottom. And I fished with floating crabs, so they would actually have to stick their entire head out of the water to get it. It was as visual as you could get.
Well, as a final reminder, Bob and I have fished not so much together, but we both fish most of our lives. And it's meaningful for us, and we hope we didn't distract too much from the conversation. But do not assume that if you have a similar situation as one mentioned in here, that it's exactly identical to what we've talked about or what Bob specifically has talked about. Call or email Bob with the facts and let him fit a program to you that makes sense monetarily as well as a safety factor. And I can say from experience that I've had some unusual claims and they worked out very well for me. What will happen is when you least expect something to happen, it does, especially in the liability arena, and it can be a major setback to your career. Be cautious, be safe. And Bob, in closing, you want to say goodbye?
Yes, I want to say thank you, Dave. I appreciate the time. And the only thing I will add, every time you send me an email, if you would please put a dot between Bob and Peppe, I'll get it. Call me on my cell phone. It's always with me, and that's how I do business.